You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. This week on The Biz, our Index Universal Life product expose, featuring Athena Index Universal Life Insurance with Matt Berman, Vice President, Sales and National Accounts with AXA Distributors.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial professionals right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today and all this week doing an expose on Index Universal Life, Matt Berman. Welcome to the show, Matt.
Welcome. Thank you.
We're talking today, and we're going to go by, some people will say, Steve, this is a little basic for us, but we're going to talk the first half in our segment today a little bit about indemnification, just to do a redux of what we should all know. Remember, about a third of my audience that is watching right now are people that are just new to our business, and so they're still learning the protection and coverage issue. On the second part of the segment, then we'll go ahead and talk about some of the ideas you can use for accumulation and supplemental income. Matt, when I'm talking about life insurance, most people say, I'm buying term. You know, I'm just covering my basic idea if something happens to me.
Yeah.
But then when we started inventing things like universal life, I mean, I remember back in the day when E.F. Hutton speaks, people listened. They invented this thing called UL. And some people said, wow, this product is terrible. Some people said this product is reinventing itself. Think about it now. We have 4 different chassis: guaranteed UL, current company assumption UL, variable UL, and today's expose and all this week, indexed. Give us a little kind of an idea of why are we using this for protection? Because some people say, oh no, this should be relegated for more income, but really we're using it for protection now.
Yeah, it's a good question. I think that, well, from a couple of perspectives, we saw once we entered in the Index Universal Life space, a lot of the sales that were generated were death benefit based. And while we came into the space thinking that we would follow with the accumulation wave, we did see a number of sales and approaches that were death benefit focused. And in our recent refresh that occurred this year, we redesigned the product to have more death benefit advantages. So looking at death benefit solves, how you can fund the contract and how you can fund it efficiently and cost effectively to give the protection that you're looking for outside of, let's say, strict accumulation sales.
Now, when you guys reconstructed this, you know, you had your launch in summer, and you, I love your word, refresh. You refreshed your product, and you said you started to think about it in the setting of death benefit scenarios, you know, protection, for coverage, for indemnification. And we can go through a lot of this, and we might touch on just to make sure everybody knows all the things you can do under the guise or the planning idea of coverage or indemnification. But what did you guys think you did that might have been a little bit unique in refreshing for the death benefit scenario?
So a couple of things. We have always had a product development philosophy of risk mitigation with the Universal Life contract, and specifically with the Index Universal Life contract. And when we redesigned it, we pared down the expenses to truly be a net low-cost provider in the space. And I think that looking at the redesign on charges, the transparency, the simplicity of the product, we've aligned it more to those sales. So looking at minimum premium solves to get a death benefit down the future, the funding that's required is very competitive, and I think matches really nicely when you look at the landscape of products that would be designed for death benefit sales, whether it's term, universal life, what have you. I think it competes on a number of fronts. But what we did largely with the product was to pare down the expenses and to make it more aligned with the death benefit focus.
Well, I think about it, you know, you're a major carrier in the United States, huge, you know, parent company. When I'm looking at all the ideas, I mean, we look at current assumption, we look at indexing, we look at variable. There's all these platforms we can launch on. Seems that everybody is moving towards indexing. You guys refreshed your product, dropped the expense loads, really made it very competitive. How about anything about guarantees? Because everybody always tells me, what about the guarantees though? Is there any kind of platform or underpinning that supports your IUL product?
It's a great point. I'm glad you brought it up. What we did specifically with the guarantee on the product is we extended it to 25 years or to age 90, the lesser of the two. And I think by supporting a longer term guarantee in the product, again, aligning it more to that particular sale and driving it towards a death benefit focus. Now, having said that, the product can accumulate strong cash value. And I know that you'll touch upon it later on in the show, but it does give more optionality in the product. So while there is death benefit, there is strong cash accumulation under it.
What I like about it is if I know my minimum guarantee to age 90 going in, and I have rough patches in the listen, we're going to have rough patches in history. I mean, S&P went down 2001, 2, and 3. We had another hit in 2008. I have expenses to pay in the policy, but I know if I'm paying a minimum premium, that you said that premium will take me to at least age 90 or 25 years, whichever is the shortest of the two. When I'm looking at that, I think that brings some solace, and what I like about it is predictability. Because now I'm on a platform that could actually do the things you said. Hey, much more cash value, could be accumulation. But what about the back door? What about the bottom line? Here's the premium. So I think that I thought was a unique part of your refresh, is to really retool the idea of what part of this is going to be guaranteed. And do you think you've had play on that issue alone?
We have. We've seen a shift and refreshing the product from more of an accumulation base to more of a death benefit sale. We've seen some shifts, but the take-up and the reception in our markets has been fantastic. I think that we are carving a nice niche for ourselves in this space, and I think with the changing environment, and that's regulatory, with the interest rate environment that we're in today, the product is going to get more and more traction and more headline, and we're looking forward to some really good sales.
Well, I always like companies that kind of go counterintuitive to the market. Everybody's going accumulation, AXA's going death benefit. When we come back from the break, we're going to continue to address the Athena Index Universal Life product and its application in your practice. Hey, and don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Welcome to the Brokers Alliance Auction House. I'm Jessica Lopez, and that's Steve Savant. What are you doing?
I'm practicing my auctioneer skills for our carrier bidding process for our producers' substandard cases.
Steve means that we're packaging our substandard cases for underwriters with specific carriers that are known to specialize in certain health impairments.
There are really only a handful of competitive carriers in each category, and we've identified who they are.
It's all about securing the best possible underwriting offer by packaging your substandard case with the right carriers.
So let the bidding begin. Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Matt Berman. And remember, you can order today's giveaways at thebiz@brokersalliance.com. And one of my big ones today is the dollar cost averaging doc. It's absolutely great. AXA has a great piece for this too, by the way, so I'm kind of giving it away in tandem. Also, a product suitability page that AXA put out, including uncovering and evaluating your client's needs. All that's free. Just write me at thebiz@brokersalliance.com, and I'll be happy to send it to you. And just a heads up, before moving forward with anything that you hear on our show, always consult your tax advisor and broker-dealer compliance department. Now, in this segment, we're addressing the Athena Index Universal Life product and its application. In the first segment, we talked about indemnification. In this segment, we're talking about supplemental income. Now, think about it. This is an actual protection or coverage or indemnification product. That's what life insurance has been all about for the last 300 years. However, there are cash accumulation. There's access to cash. This could be a great product. What if we had a good run on the S&P? We have guarantees, as we talked about earlier in the first segment, but now I might actually have opportunities to have an emergency fund or money I can get access to via withdrawals to basis and policy loans to gain. So, I mean, those are interesting. Talk a little bit about the accumulation process and access to cash.
So, death benefit product, but death benefit with cash, because we recognize the need for supplemental income in retirement planning. So, the way the product was designed is there is accumulation up to a cap in any given annual segment that allows the policyholder to accumulate some good reserves and pull that supplemental income out when needed. The product itself, I think, is designed in a way that it performs very competitively in those outer years when you're looking to access cash when needed, whether in retirement planning or whether you need that supplemental income. And when we designed it, we designed it with a low-cost chassis to get as much pickup on those outer years as possible. So looking at the time horizon, and if you're looking at a 20-year time horizon and you're looking at that accumulation and the net cost to support it, it's a very good ratio, and I think that you get some really good pickup in those years when you really need that cash and to pull it out of the contract.
And of course, you guys have multiple index strategies that you can use for this, so it isn't like you have to stick to one thing. But when I'm thinking about accumulation and cash and access to it, and I'm using indexing, well, why not? Because I'm sitting in the market trying to get some kind of return.
Sure.
So I'm thinking, when you guys built this, even though it has a very heavy death benefit slant, which is really, the company's been a huge forte in that regard, but now we have access to cash, and access to cash that really can actually accumulate, because I saw your expense charges against the market.
Correct.
And when you refreshed and lowered it, I saw a bump up, and it was somewhat significant in accumulation.
Sure.
So maybe later on, if I say, hey, you know what, my coverage isn't, I might be able to be flexible. I mean, this is why we call it flexible universal life.
Correct.
I might be able to mitigate some of my costs. I might say, hey, I don't need the death benefit anymore, or whatever. I could actually manage that down a little bit and actually bump up my cash.
Correct.
Now, when you talk about AXA in the space of agents and reps who are coming new into our business. I mean, I'm just thinking of people right now, about 30% of our audience, they're all coming out of, a lot of them medical because of the new healthcare law and so forth. They're seeking, hey, should I get into life insurance? Could you give us a little idea, when we have access to cash on an index, why is that a really good idea compared to, let's say, just a plain old current assumption UL?
Well, it's a great question. I think that the benefit of working with an index universal life chassis, regardless of carrier, is you're getting equity participation and you're mitigating your downside by having a floor. And AXA has been able to manufacture that policy structure on a very low cost basis. So any given year, your net premium is allocated, as you said, between multiple indices to your choice, and you are able to accumulate cash value up to a cap in any given year. And when the market's performing, you're reaping the benefit and you're getting that equity participation. The current assumption product or alternatives that are designed with more of, for individuals that have less risk appetite, will give you solid performance, but you are always relegated to the spread that the carrier gives you managing its general account. Index Universal Life has the same degree of flexibility, but you control your destiny a little bit more by being able to allocate dollars into indices that you believe will perform over the long term.
When we think about index universal life or supplemental income, of course we want to look at the idea of having protection on the downside. So I'm not going to have any negative performance numbers from the account itself, even if the S&P goes down or whatever index we use. But we still have expenses to pay.
Sure.
Now, with your reduced expenses, that tells me that, hey, my expenses are a lot more manageable now.
Sure.
And if I want to go ahead and say to a client, hey, I may not have, my only downside is my expense loads.
Correct.
I mean, that's really when you think about it. So it's kind of limiting. I want you to remember, if you're watching this today on Monday's show, don't forget to watch our Thursday show, because we're going to be talking about policy loans. And AXA has taken a position that may be a vanguard position. I don't know, we'll have to see. But I don't want you to forget it. We're going to talk about policy loans, the difference between participating and non-participating loans on an index. It might change the way you think about it, so don't forget to watch that. Just before we clean up our segment, if I have to do, I have both the yin and the yang. I got indemnification, I got income. How can I make that pitch? If you had to give an AXA pitch, give me a redux of what that is to have both and accessing both death benefit coverage and access to cash.
Well, I think with our product specifically, we designed it in a way that can give you some optionality on both fronts. So if you're thinking death benefit focused, great. The policy expenses will support it. We give you the ability to accumulate, to get strong, competitively cost-effective death benefit protection. But one of the things we didn't mention is if you're really bullish on the market and you want that accumulation, you want that supplemental income, the policy allows you to elect what we call choice options. So for an additional 100 BIP asset charge, you can get 3 more points on your cap. So if you feel that strongly about the market and you think that this is going to be a great accumulation tool for you, we give you that access and we give you that choice. So
remember, you can watch this show and all our shows by clicking the red on-demand video button right on our homepage at brokersalliance.com. Well, that's the buzz for the biz for today. You've been in the zone, the business insurance zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.